Hey everyone, Coach Investor back with the second video of the day. If you missed the first one, that was about SoFi. Great quarter, great beat. Now we're going to talk about another amazing company out there, Airbnb. Beat on earnings per share, beat on revenue as well. But even after all that, the stock was down around 7%. It recovered a bit. It's now only down 3% after hours at the time of making this video. Why is that? Well, the quarter was great. Another record quarter, another great quarter, but outlook was a tiny bit weak. And obviously, maybe the fears of, is this the best version of Airbnb? Can they do better in the coming quarters? Can they do better next year? Those are questions that, well, will be answered in the coming quarters. Obviously, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed yet, maybe hit that subscribe button as well. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So we can see here that quarterly revenue grew by 29% to $2.9 billion. That's a 29% increase over a 67% increase last year. So not bad at all, especially in the current macroeconomic environment. Many probably thought that, well, a lot of people might not be traveling anymore, but it seems that the after pandemic, and maybe not just after a pandemic, the pandemic surge of Airbnb is continuing. Now, when it comes to profitability, this is their most profitable Q3 ever with $1.2 billion of net income that increased 42% year over year. Doesn't stop there. No, not even close. Adjusted EBITDA of $1.5 billion, and that represents 51% of revenue. Now, as you see those numbers, obviously you are asking the question that I asked you at the start of this video. Is this peak Airbnb? Or can they continue to grow like this? Can they continue to perform? Can they continue to be as profitable as they are today? Because even I have doubts that we might see peak Airbnb right now. Remains to be seen. Obviously, if this continues and stays flat, of course, with the amount of free cash flow that it generates each and every quarter, it's not that bad. But you would like to see more growth going forward. It remains to be seen how they do it. Longer stays, more supply, more new categories, more experiences, etc. Maybe they'll expand to, I don't know, full package for vacations, flights, you name it. I don't know. Maybe we'll have some announcements. Remains to be seen, but obviously do share your thoughts down in the comments below. Now, as for net cash provided by operating activities, so that grew 33% to $966 million. As for free cash flow, that's now, well, $960 million and $3.3 billion of trailing 12 months free cash flow. So it's actually a tremendous business. It's unfortunate that we could not have gotten this business a bit cheaper, but that's the thing with amazing companies. Usually the market already gives them a premium, and then, well, you just have to deal with it. And that's obviously with Airbnb, the prime example. And this is something you don't really see a lot. So they're effectively managing share dilution because of stock-based compensation by having repurchased $1 billion of their $2 billion share buyback program. So as you can see here, common shares outstanding in June 2022, 639 million. Right now, we're sitting at 633 million. Obviously, they still have $1 billion left, so they can do what they can activate it whenever they want. And now as for outlook, so for Q4, they expect a strong quarter of revenue growth, delivering between $1.8 and $1.88 billion. This represents year-over-year growth of between 17 and 23% and a 62 to 70% increase relative to Q4 2019. Of course, on an FX neutral basis, they anticipate year-over-year revenue growth between 23% and 29%. But, and here's probably the part why the stock was down or is still down 3% after hours, and that's because, well, they expect their revenue as a share of GBV to decrease in Q4 2022 relative to Q3, consistent with historical seasonality. Of course, they say historical seasonality, which again might be true, but you also have to add, well, the current macro environment as well. They do add some more color with regards to Q4. So 4 weeks into the quarter, they're seeing promising trends in cross-border travel. We're going to talk about that in just a bit. Renewed interest in urban stays, stabilizing cancellations, as well as strong backlog of future bookings. On a year-over-year basis, they expect nights and experiences book growth will moderate slightly relative to Q3, while ADR, the average daily rate, will face some pressure from FX headwinds and business mix. We expect Q4 adjusted EBITDA to be up meaningfully on a nominal basis from Q4 last year, and expect quarterly adjusted EBITDA margin to be in line to modestly higher than last year's margin of 22%. Now, before we go and look at all the extra details that they provided, of course, the current macro environment will have a negative impact on the company, but you can spin it around as well because, everything is becoming more expensive, so more people might be inclined to transform their property, or maybe they have an extra one or an extra bedroom, into an Airbnb to generate more income, which is obviously great for Airbnb because that will increases the supply of their hosts, of the properties on the website. So you can look at it from both sides. Now, of course, there's still this thing of extremely high cleaning fees. I don't know how that will get resolved, but maybe they'll talk about it during the earnings call or maybe in the event later in November. So as for more details with regards to, the business highlights, so with regards to travel corridors and distance, so in Q3, cross-border was 43% of total gross night booked, up from 33% in Q3 last year. As the impact of the pandemic recedes but macro conditions persist, we expect a continued, albeit choppy recovery of cross-border travel to be a further tailwind to future results. As for urban and non-urban, so that's consistent with recent quarters, they continue to see signs of travelers returning to cities, historically one of the strongest areas of their business. Gross nights booked, by the way, I don't think I've showed you this number, so let me scroll up. So GBV was $15.6 billion, that's up 31% year over year, and or 40% excluding FX. So going back down here, so gross night booked in high density urban areas represented 48% of the gross nights booked in Q3. And now another very important metric, and then I'll end it there, or maybe I'll add just the average daily rates. So the trip length, obviously a lot of people are looking at, is this going to continue? Because as they mentioned in the shareholder letter, more and more companies are requiring now employees to come back into office, even though to me it doesn't make any sense. So will this trend continue at Airbnb of longer stays, 28 nights or more? So they say here that longer term stays of 28 days not nights, or more accounted for 20% of gross nights booked in Q3, stable with the same quarter last year. Overall, approximately 45% of gross night booked were from stays of at least 7 nights in Q3. Last two things here, average daily rates was $156 in Q3, only a 5% increase from the same quarter last year. And as for supply, so in July, all mainland China listings were taken down, but they say here that active listings grew approximately 15% in Q3 compared to a year ago, representing sequential acceleration relative to Q2. So that's nice to hear, and that might be, the result of what I mentioned before, people looking for that extra income. So to conclude, and I just checked again, the stock is down again 6% after hours. Now with Airbnb, it's pretty simple. If it can drop more and become a bit cheaper, because right now market cap is still around $70 billion. Now, of course, it can continue to grow. It was much higher, right? It was over $100 billion at one point, might be over $100 billion at one point in the future as well. But if you want this to continue to grow, and if you are a believer that this is not peak Airbnb, then maybe it might be fine today. But if you do believe that we're near peak Airbnb, then you would like to get in a bit cheaper, because we never know what's going to happen in the future. Travel is obviously, let's say, a luxury, but of course, if people will start to use Airbnb as just a way to live, then maybe the thesis has completely changed. That remains to be seen. Obviously, do share your thoughts down in the comments below. I'm still holding to my shares of Airbnb. If it drops much lower, I'll consider adding more. Tomorrow's video will be about the 4 stocks that I added to my portfolio in October, so stay tuned for that. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.